Palantir stock. The big dog sold Palantir pretty dang heavily. CEO Alex Karp sold $325 million of Palantir stock here this week. I mean, absolutely, obviously a huge number. So, I want to share my opinions and perspectives on this, kind of tell you, do I think this means that Palantir stock's about to go down a bunch? Do I think it doesn't really matter? We'll speak about kind of my thoughts in regards to that. Also wanted to run through a kind of Amit's thoughts. I thought his thoughts were pretty interesting there. Then when I want to react to this video, it's a little 1-minute clip, call of the day, PayPal. Obviously, I'm a big PayPal shareholder, so I'm always interested to hear what people are saying about that. Nike, this is a stock I've been buying almost every single week for a while. They made a massive change. They booting their other CEO out, bringing in a new gentleman who's been with the company for 32 years, had retired for the past few years, and they're bringing him back. So we want to react to this video on Oppenheimer's opinion there. And then last one up here, BMO raised their price target from the S&P 500 to 6,100 for this year. The S&P's like 56 in the 56, 57 range, so 6,100 is a crazy call. I mean, there's only a few months left this year. That might be the most bullish take of all. So I want to react to that one. Appreciate y'all joining me as always. Thank you so much for being here. Thank you for smashing that thumbs up button, and thank you for being subscribed here. We're now 50,000 plus subscribers strong. Okay, so obviously the big sell from Alex Karp there, right? Now we could look at this a few ways, right? One is the company's getting the S&P 500, so why not go ahead and if you want to sell some shares of Palantir, want to go ahead and get rid of some now, right? When you're going into the S&P 500 and you open up a lot more shares for other folks to go ahead and buy out there, right? That's certainly a thing to do. Additionally, when would you rather sell your stock if you're going to sell your stock if you're an Alex Karp? When it's near all-time highs, or when the stock's crashing or you're in some bad market? I could be honest with you, it looks a lot better to sell when your stock's flying high. Technically, it never looks great if you're a CEO and you're selling a stock, but this happens all the time, with basically every single company, right? But if you sell when your stock's crashing, let's say you're in a big downward trending market and you're selling your stock, it looks extra bad, right? Because it's here the stock is crashing and you decide to sell your stock, it looks really bad. If it's going up, everybody's making a bunch of money. I just think the optics of it looks a little better in theory, right? Plus, there's obviously a much bigger demand for Palantir stock. So that's something to kind of keep in mind there, right? Now, the other way you could look at this, okay, if we want to really look at this jaded, if we really want to look at this negative, you want to go really negative? Let's go really negative. The really negative angle would be Alex Karp looks at this, he says the valuation of the company doesn't make sense. And he says, in his brain, he's this doesn't make sense. We're not going to hit these sort of growth rates that investors are expecting, and so I need to get out. If we want to look at it very negative and jaded, that's definitely the way we can look at it, and that's certainly the way the bears are going to look at it, right? They're going to say, Alex Karp's selling because the valuation of stock's ridiculous, and they're never going to be able to, hit the sort of growth rates that people think they're going to hit, right? And they're also going to say, if Alex Karp really had confidence the company's going to get back to those 30% revenue growth rates that the company used to have, right, then he would have held his shares. So that's the way bears would look at it, right? Now, I thought Amit had an interesting take here. He says, Palantir is up 100% plus year to date. This is not because of memes, this is because of execution. When a stock surges this much in a year, people take profits. If the stock was up based upon pure speculation and no execution, that would be insider cashing out to cash out. When the CEO takes everyone along for the ride, aka helps everyone get rich, due to which certainly, now we're up 300+% on the stock. I'm sure a lot of people are up 200, 300, 400% on the stock now. A lot of people are making a lot of money in regards to this one, right? Due to winning more deals and reaccelerating growth. I have no problem with them taking profits. 2, Alex Karp has vested these shares for decades. He deserves to get liquid. 3, these shares were exercised from stock options, which means you also have to sell to cover the taxes. These type of capital gains, the taxes are heavy, obviously. If we're talking about 300 million plus, yeah, it's a big tax number, right? 4, if you hate him selling so much, you can also sell. But if you have 5,000 shares compared to his 60 million, it might not make sense given the allocation sizing that someone like Karp has toward Palantir versus your stake. 5, finally, a sell at these levels is probably him saying that he thinks the stock is getting up there in valuation. Karp said a while back that sometimes a stock will be undervalued and overvalued, but he does believe the company can be 10 times bigger than it is now. If the market cap is willing to pay $80 billion for Palantir, if the market's willing to pay $80 billion, right? He thinks the valuation is stretched in managing risk. There's nothing wrong with that. And actually smart for a 56-year-old who's dedicated the last 25 years of his life to Palantir. However, this also doesn't mean the stock has to sell off based upon his selling if there's enough liquidity to absorb it. True. But it could also signal that the stock will consolidate here versus pushing forward for the next catalyst. My final 2 cents, this is not a big deal and quite frankly expected for someone who's been at the company for 20 plus years and had his stock go up 115% year to date. Anyone else in this situation would literally do the same thing. And if you really hate the move, you can sell a portion of your shares with Karp. Yeah, you could. You could sell 16% of your position or whatever, right? So true, this person posted this here. It says, Karp sold millions of shares below $10. Karp sold millions of shares below $15. Karp is selling millions of shares this week at $35. Time and time again, the Palantir bears try to make sense of it. It's clear by now that these sales are effectively meaningless, engaging future price, right? And, to kind of cap off this, I think something very important to everybody understands out there is let's think about the biggest, most powerful companies in the world, right? Who comes to mind when I say that? NVIDIA, Meta, Amazon, right? These sorts of companies. Apple, well, Steve Jobs sold Apple shares countless times over his tenure when he was at Apple or when he wasn't with Apple. If we think about it, we can think about Microsoft. You don't think Steve Ballmer's ever sold shares of Microsoft, and Bill Gates? Of course they have, right? We think about NVIDIA and Jensen. Do you think Jensen's never sold any shares of NVIDIA stock over the years, right? We think about Meta. Zuckerberg certainly sells shares all the time in regards to Meta. Jeff Bezos always sells shares of Amazon. And look what ended up happening. I mean, ideally, those guys, all their net worths would have been higher if they had held all their shares. Honestly, it would have. Steve Jobs, if he would have obviously been able to live a full life, and if he never sold any of his Apple shares, he would have been by far and away the richest person. He would have been, in terms of like a percent of net worth, he would have been far richer than Elon Musk. He actually would have been, I've done the math before, he would have been up there with Rockefeller in terms of what he was in such a ridiculous sum of net worth. Steve Jobs would be like that today. I did math before, and it was something like $400 billion plus net worth Steve Jobs would have, right? But obviously he made decisions to sell shares countless times in regards to Apple, right? And then, you look at all these guys. I mean, Elon Musk has sold a lot of shares of Tesla over time, and some of those shares sells by Elon Musk were at much lower prices than that stock is today. So there's a little food for thought in regards to this. Is just because somebody sells doesn't mean the company can't keep going up over time, right? So that's the moral of the story in regards to that. Certainly, if you're bearish on Palantir, you're going to run with the narrative that Karp knows the company's crazy overvalued. That's why he's selling. But what about the past sells that he's done, right? What about all these other guys that sell their stocks all the time, and yet the stocks just go up and up and up and up and up for years, decades to go in the future? So a little food for thought in regards to that.
Outperform, buy with Prime Time. They say it's now available at Buy with Prime and check out Amazon. Josh was highlighting this the other day. You want to talk about this?
He's like, no, I don't actually.
Look, I think the story here is that Alex Chriss, the new CEO, is very quietly making really big strategic deals behind the scenes. I do expect something with the near field communication chip that Apple is now opening up. I think you're going to have Pay with Venmo be a viable option at retailers all over America.
Sure.
And I think what you're seeing here with some of these things with Amazon and Shopify, also we didn't talk about in the last week, these are just really smart ways for PayPal to reassert itself as one of the easiest ways to do e-commerce. And the market likes it. So this stock remains a top-tier performer. It's making new 52-week highs. Almost nobody is paying attention to it. It's a little bit beneath the radar. It's not a mega cap tech. It's not a fast-growing company. It's definitely a value stock, but the trend is up, so I'm going to stick with it.
Yeah, PayPal's set up to significantly outperform the stock market, and when I say the stock market, the S&P 500, and honestly the Nasdaq for several years to go in the future. And let me go ahead and show you why. So in regards to PayPal and why this stock is set up to significantly outperform the S&P 500 and the Nasdaq over the coming years, okay? One is the P. If you look at forward P, 2-year forward P, we're trading like under where the market in general trades at. Now that would be fine if PayPal had less growth than an average company, but in fact, the earnings per share growth and revenue growth expected from PayPal over the coming years is above where average stocks in the market trade at. So that's why PayPal, even at $77, is a steal deal. Is it as much of a steal deal as when it was 57 not that long ago? No. But is it still a steal deal versus the market? Yes, absolutely, okay? If we run a little, we go to 1000X here and we'll go to valuation, okay? And we run some pretty conservative numbers around PayPal. So let's say 8% revenue growth a year. All right, let's run 8s across the board. They should get a nice uptick in regards to net income. So let's say about 12% a year in net income growth, right? And you could value this company somewhere between a 20 and a 30 PE is very fair for a company like PayPal. It's got a very sticky business model that has a massive installed user base and has, high single-digit revenue growth on average and low double-digit net income growth on average. Here's the deal. You're looking at this stock in that sort of scenario, priced somewhere between 130 and 195 in 2028. Keep in mind we're about to go into 2025, right? Which on the low end would give you a compounding annual growth rate of 14%. On the high end, that would give you a compounding annual growth rate of about 26%, right? Which is pretty extraordinary. And that's with this wouldn't even be like Alex Chris changes the game in regards to PayPal's growth rates. Like 8% and 12%, very lame growth rates for PayPal. And there is a potential that these growth rates, they do get back to double digits, where the company used to be. And keep in mind, if the consumer gets in a better spot over this next few years than they've been over the last few years, that's going to help overall commerce, right? So let's say they do about a 12% and 15% numbers here. Take a peek at this. Now we're talking about with these sorts of growth rates, which this is a possible scenario, 12% on average revenue and 15% on average net income, 20 to 30 PE ratio, right? Which you can make an argument that you should be able to command at least a 25 minimum, right? If you're growing low double digits, top line, 12%, and you're growing 15%ish net income, you're going to command at least a 25 PE ratio, minimum 25, right? That puts your compounding annual growth rate at somewhere between about 24% and about 30% roughly here. So now you can begin to understand why PayPal is set up to significantly outperform the S&P 500 and the Nasdaq over the next several years. Alrighty, let's get into Nike
now, which had also warned of those soft sales in China, but the stock is surging today after announcing CEO John Donahoe is stepping down and company veteran Elliott Hill.
So do I love that Nike stock's blasting higher, considering I've been buying the stock almost every single week for months now? The answer is no. And the reason being is I'm not done buying Nike. And so I don't want Nike to go up short term. Like, I don't need to feel better about. I got so many stocks that are bangers, right? Meta's up so much. I'm up so much on Meta, it's ridiculous. And Elf, and Tesla, and Palantir, and Amazon, and Revolve. I have so many stocks that I'm up massively on. I don't need to feel like good about myself in the short term. And so, I need Nike to turn green to make me feel good. No, I'd rather Nike be red for the rest of this year. I'd rather be red on my Nike position for the rest of this year because I want to continue to buy that stock for at least the next 3 months. So that's kind of my opinion in regards to Nike. I'd rather have this announcement that came at the end of the year or something like that.
Is coming out of retirement to replace him. Here to talk about what this means for the future of the sneaker giant, Brian Nagel is a senior analyst at Oppenheimer. He's gotten outperformed, sticking with it, $120 price target. And Brian, it's worth repeating, as Dom Chu pointed out last hour, Nike shares are down about 50% from their pandemic highs. How do they fix this story?
Well, yeah, thanks for having me on. Look, I think the issues at Nike have become pretty well known, okay? And really, there's probably two buckets now. I mean, one, they need to revitalize product innovation. And then second, they need to re-embrace the wholesale distribution. And I think, this CEO announcement they made last night, I think is very much a step in the right direction because they're bringing back a proven, successful executive of the company who, when he was with Nike, Nike was performing much better. Sure. And so I think this again. There's still issues for Nike. There's challenges. It's going to take time, But I think this CEO announcement is very much a step in the right direction.
So I got to say this, obviously the incoming CEO, he is set up in such a good position. Like I want to trade positions with him, man. He is set up so phenomenal. Why? Well, Nike's had very weak sales for the last year or two. Why? Well, really what it comes down to, I know everybody wants to say it's this, say it's that. At the end of the day, a lot of Nike's customer base just hasn't had money to go buy a new $100, $200 pair of shoes. I'm just going to be honest with you guys. Inflation sliced and diced the middle class and below the middle class. And it's not like it's just in the United States. It did that in Europe. Europe had even inflation problems worse than the United States. Imagine you live in international markets where your currency is getting destroyed while you got massive inflation going on, right? Nike does business all over the globe. China's been very weak. I look at China and I say, I think China's going to strengthen in 2025, 2026, which is going to bode very well for Nike. I think international markets in general are going to strengthen in 2025 and 2026. As far as the U.S. consumer, as a whole, even if unemployment rate goes up, the U.S. consumer is likely positioned to actually strengthen over the next couple years. And the reason being is inflation's now out of the picture. We're now going to have likely 1% to 3% inflation over the next probably year or two outside of some commodity super cycle or something like that. And that's going to help the consumer out. So they're not going to be sliced and diced by inflation like they have been. And so when you put all those pieces together, right, I think Nike's very well positioned for 2025 and 2026. Now, if you can get a little more innovation going, right, and kind of do an Alex Chris type thing, oh my gosh, you're talking about a game change in regards to that. So I got to be honest, he's in a very good position to start out here with Nike, in my opinion, for 2025 and 2026.
But to Tyler's point earlier, there's also the little problem of massive competitive pressure. I mean, the sneakers from On are ubiquitous. I see them everywhere. The same was true of Hoka a couple of years ago. How did they miss?
Yeah, these brands come and go, though, right? Allbirds was the big thing 3-5 years ago, and now Allbirds is about to go bankrupt potentially, right? I think that stock's under $1 a share. I think it was, last time I checked, I think it was 70 cents or something like that, right? So these other brands, they come and go. Like On's here, and then 3 years from now, 5 years from now, might not be the hot thing. No one might care about that. So it's just some food for thought in regards to that.
A step on the fashion.
Well, look, I mean, Nike's a massive company, right? Okay, so if Nike's misstepping, losing connections with consumers, that does open, to some extent, opens an opportunity for smaller players to come in. And I think that's exactly what happened. Now, we'll see. I mean, my sense is, and having studied Nike for a long time, is that there's still an underlying consumer demand for Nike. I think if Nike gets this right, Nike starts to introduce better product, more innovative product, and is selling these products where consumers want to buy them. We're not talking about these wholesale partners. I think what's going to happen here is you're going to have a shifting dynamic. I think, look, there's some of these smaller companies that have done very well. Maybe they have staying power, but I think they're going to be fighting against a stronger Nike, and that's going to be much more of a challenge.
It's very interesting to me
they're going to be fighting against a lot stronger Nike over the next few years, and I wouldn't want to battle them.
It's happened in the world of sneakers. I'd be interested in your thoughts on this. Sneakers have gone from being athletic wear to being everyday footwear, and that has also, I think, benefited a couple of those competitors that Kelly just mentioned, whether it's On or Hoka or Ball Star or a whole host of them that are fashion items as much as they are functional footwear, and certainly not necessarily athletic items, which has been the sweet spot for Nike for decades.
No, that's a great point. And what that basically means is that the market for what's called athletic footwear has expanded significantly. When they're in that sense, where the market share is coming from is traditional footwear companies. I always make the joke, I'm talking to our clients, I don't see as many loafers out there anymore when I'm either in my office or the offices of our clients. A lot of people are wearing sneakers. So, that dynamic is very much happening. And I think that, again, going to Kelly's question, I think, that opens an opportunity for, reemerge and reinvigoration of Nike, and maybe still some success of these smaller players that have performed well over the last few years.
Bring back the loafers, Brian. Bring back the loafers. You got to visit my closet, man.
I've got a lot collecting dust as well. I don't know what to do with them.
Yeah, you just can't find a good tassel loafer anymore. Brian Nagel, thanks, man. Appreciate it.
Thank you. Nice seeing you.
Okay.
Oh, that's funny. Yeah, I mean, that's the best thing for Nike, kind of, if we're thinking about like trends over the next 5-10 years. Obviously the last year or two has been tough because of the state of the consumer, right? But if we really think about where things are headed over the coming news. So that's the best thing for Nike is really, athletic clothes becoming so commonplace, right? Like yoga pant trend, obviously shoes instead of loafers, all those sorts of things benefit Nike in a massive way because those are all the products they sell. The worst thing for Nike is everybody's dressing in suits all the time, right? Alrighty, let's get into this one. S&P 500, 6,100.
He's bull on Wall Street. His name's Brian Belsky of BMO. He joins us now because he raised his S&P targets, the highest on the street, 6,100. It's good to have you with us. I do recall on August 5th, you said we're going to retest the lows. And here you've raised your price target to the highest. We knew rate cuts were coming. So what happened?
Well, thanks for having us. I really appreciate it. The resiliency of this bull market cannot be doubted. That's number one. Number two, I think it was common sense. Typically and historically, we see August and September being very, very volatile, and they were, unfortunately, for us trying to time the market and get this call out in terms of upgrading the market when the market was down. It didn't work out. And without trying to be too cute on this, Scott, we just simply believe stock prices are going to be higher by year end. That's number one. Number two, third year of the bull market starts to occur and unwind late in October. We think, again, it's part of a longer 25-year secular bull market that we've had the call on for a while. Number three, we do believe that the Fed is doing a great job. We believe the Fed that we're not heading into recession. We believe the Fed that we're heading into more of a soft landing. And per our call from a longer term perspective, we think that we're in this 1995, 1996 environment where we handled a 24 times earnings multiple during the times of the Nifty 50, which is very similar to what we've seen in terms of the Magnificent Seven. Lastly, I'll say this, and I think this is 2 points that people are missing. Number one, the Magnificent Seven and really the top 10 biggest stocks in the S&P 500 have underperformed in the third quarter for the first time in over 2 years. Yet the market's hitting new highs. I think that's very notable. Why is that? Because you've got 339 stocks in the S&P 500 outperforming the market. We haven't seen that type of breadth and broader outperformance in almost 22 years. And I think these are things that people are missing. We think that speaks to the overall breadth and strength of the rally that obviously we still see continuing.
So what a dangerous call. What a dangerous call. I mean, calling for 6,100, you don't have much time to play with here, right? You basically have 3 months to play with. And we still probably get in tax loss harvesting the fourth quarter on a lot of stocks. Not the biggest stocks, so that's a good thing for the overall S&P 500. It's not really going to be felt in the biggest stocks. It's going to be felt in some of the weaker ones, right? Some of the smaller ones. But that's still likely coming. Seasonality, I mean, let's just be honest, like September and October is usually weak. It hasn't been so far, but there's a risk that it could be weak. So I'm just like, such a dangerous call. Sometimes I wonder if, because now he and BMO, they're like the biggest bulls on the market. And sometimes I wonder, like, do they just do it for publicity? Like why do they do it? Like such a crazy call like this. Like, my God.
Was this because it was 50 and not 25, and the supersized cut led you to a supersized target?
No, we actually wrote the piece a couple days prior to. We wanted to see what the language of the Fed was going to be. Internally, in my own team, we were struggling with 25 or 50. At the end of the day, it's a great question. It's a moot point. We just happen to do it because we know that the market is on a short-term basis very reactive, and we knew we'd see some reactive moves after the Fed spoke on Wednesday, and that's why we published the piece before the market opened on Thursday.
Yeah, all right. That was an interesting call. Appreciate you guys joining me. As always, if you're looking to apply to join my private stock group, private wealth group, get access to 1000xstocks.com. That will be pinned comment down there. You click on that and fill out a form. We'll see if we can get you in there maybe next week at some point. Much love and have a great day.